So I think before we start, there are these four trends currently going on. Like one is your crypto plus AI, your Trump and tariff is there, plus your IPO trading and the gold and silver. These are four trends currently going on. Any one of the trend do you think you would like to spend time and basically give your
Okay. So see, crypto. Honestly, I don't understand. I've tried and I've tried multiple times to understand it. I'm still breaking my head, and I have a bet with my son. He's still only ninth standard. He's less than 15 years of age, and for the last 2 years, which means since he was 13 years, he's telling me to invest in Bitcoin, and I've told him no, 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 and he's dancing on my head every single morning that I told you to invest. See the price of Bitcoin. So I've completely failed on Bitcoin. If somebody can explain me, I'm more than happy to correct myself. But I don't understand Bitcoin. Number one. Number two, when it comes to I think it's already in our lives, as I was mentioning earlier. So, and it is real, right? And it is extremely helpful. For example, my entire research team, okay, whenever we are investing in a particular company or whatever, I tell them to make a research note, an investment rationale note. Nowadays, that note comes to me in less than 10 minutes. What used to take me earlier, what they used to take probably 1 day, 2 day, 3 days. And I used to wonder what has happened. And then I realized that they all are using ChatGPT and Perplexity and writing the notes and sending it to me. But the important part is that those notes are absolutely perfect, because when I read them, I don't even realize what has happened, but they are absolutely perfect, which means this AI is very real. We have to adapt to it. If we don't adapt, we will become irrelevant. Let's be very honest about it, right? So it is very important that we adapt AI, very clear. And I think the kind of the investment that we are seeing in terms of the data center, this trend is going to grow through the roof. It will have its own ups and downs. There is nothing like a one single line up. But with ups and downs, over a period of time, we are always up. And this is going to go crazy, absolutely crazy to my mind. So earlier, we adapt, the more quicker we do it, better for us. Otherwise, we'll become irrelevant. That's my thoughts on AI. The third was gold and silver or something else?
gold and silver?
Okay. So, on the silver side, I personally feel that it is always a bit speculative. It has couple of applications in terms of industrial side, now on the renewable energy, and I think somebody was telling me also on the EV side. But overall, silver trade is relatively speculative compared to gold, right? But again, if you see the long-term trends, both the metals generally move in the sync. They both move in the same direction, up or down. So if somebody prefers silver, they can be there also. But why silver is going up? I said it's little speculative. So because gold is going up, is that the reason why silver is going up? Maybe, I don't know. But as far as gold is concerned, first a disclaimer. I'm extremely heavily invested in gold for the last 2 3 years. Like I was talking to you about the sovereign gold bonds, and as I said, when I realized that this is not something which is going to come on a regular basis, and we need to allocate as much as possible. So I personally took a lot of bet on the gold. But the big picture why I liked gold is because of the, as you all must have now, by now you must have read about de-dollarization, right? So this is something what was my thought sometime in the year 2022, and the first time that I invested in the sovereign gold bonds was the December 2022 series, and I also participated in the February 24 series, which was, I didn't know at that point in time, but which is effectively the last series of the sovereign gold bonds, right? The thought process there was very simple, that the de-dollarization is going to happen very soon, because the way the fiscal deficit, the way the debt, the way the amount of dollar, the greenbacks that they had printed in the last so many decades, and it had even further accelerated during the global financial crisis. And just when they were thinking of kind of unwinding that, the COVID happened, and during COVID they have literally rained dollars out there in US, which means they have printed beyond limit, which means they have actually abused their reserve currency status. Now, once you know that the reserve currency status is getting abused, at some point in time, the global, the sovereign funds who are investing such large money in the US Treasury, and because the dollar is strong and because the yields are good, they will start reversing it as soon as the dollar starts weakening. So it's a virtuous cycle turning into a vicious cycle. Now, because of that, this global major change that's happening, and now with the tariffs that they are trying to do, they are forcing some of these countries to invest $300 billion, $500 billion, like Japan, South Korea, Europe. To my mind, now the emperor is naked. Now, whenever that happens, it's a mega trend that may happen. We don't know where will gold actually settle. Can it go to 6,000? Can it go to 7,000? Can it go to again 3,000? Very much possible. But the probability is that it will remain strong for at least some time, because the reserve currency is getting challenged. The reserve currency status is getting challenged, and there is no alternative that is getting created. Like China is probably the only strong alternative, but because they are not a democratic country, renminbi, it's not easy for the world to accept it, right? So and there are multiple events that have happened, right? So for example, they were always in very heavy debt as a country, US, for last many years. They had so much of high fiscal deficit. But what triggered this? It started with when they actually seized the assets of Russia. That's when everybody started getting worried. Then, this tariffs happen. Then they are starting muscling people to invest compulsory over there. And a lot of these Middle East countries, which are extremely cash rich, the Abu Dhabis of the world, the Saudi Arabias of the world, the UAEs, the Qatars of the world, their currencies are pegged to dollar. And today, dollar has depreciated significantly against pound, euro, and many other currencies. Unfortunately, except for rupee, other currencies have appreciated by 10 to 20% in the calendar year 2025 versus dollar. So they all are now getting jittery that why are we pegged to dollar? We are at a loss. So they all are now getting worried, which means but whatever money that they are investing in US treasuries, they all have started pulling out big time. China has already pulled out $1 trillion from the US treasury. So I personally feel that the other most important thing, the gold is one asset class which is backed by the central banks. All the central bankers in the world, whether it is RBI, whether it is the UK central bank, whether it is the German central bank, in fact, most of the Western European countries, their forex reserves, 60 to 80% are in gold. Like India, for India it is 6, 7, 8%. For China, maybe it is 10, 15%. But Western countries are not putting money in US dollars because they don't need dollar. India needs dollar because we have so much of import cover, right? But the fact is that in the last 3 to 5 years, all central bankers have beefed up their gold reserves. What I'm trying to tell you is that among all the asset classes that we discussed, whether it's Bitcoin, whether it is silver, whether it is gold, gold is the only one which central bankers are backing it up. They always like to go and invest in gold, but they don't invest in any other asset class. Right? So until the time Bitcoin gets accepted by the central bankers as a currency, conventional people like me and Anup will never be able to accept it. Right? But gold is something what they have always been part of their reserve portion. And in the last 2 to 3 years, in fact, as recent as I think in July or August also, central bankers have been buyers in gold, net buyers.
Anything you would like to touch on IPO trading versus Trump and tariff?
So this is a very it's a very interesting thing. In fact, I and my dad were talking that whether this IPOs will do well or not, nobody knows in terms of giving stock returns after 2 3 years. But at least the newspaper guys are making money hands over fist. Every day we open Economic Times, first 4 pages are IPO. In fact, Economic Times came up with 2 editions this time. Amazing it was, right? So IPOs, it's a mad rush. I will tell you with my personal learning, nothing to do with this kind of this time IPOs. As a policy, as I was showing you some of those things, whenever IPOs come, as professional managers, we are never in a hurry to invest in those companies. We wait for at least 4 quarter results after the company is listed, which means 1 year after the company is listing, then we go and evaluate, are they actually playing out what they had promised. Because 8 out of 10 times we have seen that before the IPO they would have beefed up the results because they want to come out with good pricing. The merchant bankers will tell them do this, do that. They will be dancing all around and doing things. They will be sometimes also manipulating the books, and so many things keep on happening, right? So to avoid any of those accidents, we are always very patient, because I'll tell you one very important thing in investing. It's not only being patient after investing, but it's also being very patient before investing. Everything is good at a price and bad at a price. So we are never in a hurry. Also, another very important thing, in IPOs, we don't get enough allotments. So when we are, investing 1,000, 1,500, 2,000 crores of money, unless we are able to invest at least 100 crores in a particular company, we are not interested. So when it comes to IPO allotments, we don't get that kind of allotment. So anyways, what's the point of putting in energy and money at that point? And we just have 20 stocks in a portfolio. So we don't have too many liberty, like we can make 80, 100 stocks also. So that's also one of the reasons why we are not very happy. But more than that, our experience has been of all these years that that we believe that it is better to wait, see the results for at least 3 4 quarters. Like for example, when I said that wherever a large acquisition is there, we wait for 1 year. After 1 year, we will go and revisit, see is it playing out the right way. We are very happy to invest, and there is enough money to be made even after that. So don't ever think that after 1 year the stock would have done well and all of that. Nothing will happen. You will get enough opportunity after that, and there are multiple examples. Like for example, I gave you the examples where the merger did not went well. Like, but we invested in a company called Tech Mahindra after they took over Satyam. So after 1 year, we said this acquisition is actually a good acquisition. It's playing out well. So even after 1 year, when we invested, it made tons of money for us. So we are never in a hurry for the IPO trends. And the last thing you asked was tariff.
Tariff, Trump.
So I did touch upon that. I personally feel that most of these tariffs are very, very illogical, and at some point in time they are going to reverse. Particularly the 50% tariff that's come on India, it's definitely not going to sustain. It will reverse very probably sooner rather than later, is my sense. We will be at least at par with the other countries, and the when I say it's illogical, because I'm not seeing the benefit of USA on this. Right? If it was beneficial to them, I would have said, okay, it's logical for them, and we have to live with it. But this is going to see the reason why US Treasury attracted so much trillions of money, and why their currency was strong, because of one big reason, which because was the inflation was the lowest for decades and decades. And why was it lowest? Because China was exporting not goods, they were exporting deflation. They used to provide them goods and services at one of the cheapest rates and quality stuff, right? So when you are exporting so much, or when you are importing so much of deflation, by putting tariff, you have actually completely reversed that. So the US inflation will go through the roof, and there is going to be serious challenges over there, right? For example, I know somebody. I'm telling you, just giving you a small example. I think garments and everything will definitely get very expensive. But say even something like candles. I know a manufacturer who supplies candles. So I was discussing with him, and I said, "What do you say?" So they said Walmart has already increased the price from $3 to $5. So we are getting compensated anyways because of these tariffs, right? Now just imagine like this: every household item will keep on increasing. Inflation over there in the next 12 to 18 months to 24 months will go through the roof, and currency will have again more challenges. So I think that at some point in time over there also, some sanity will prevail, and thanks to that, tariffs will probably reverse.
So I'll come back to the AI point once again. So do you think the AI will cause some sort of recessions? Is that thought is there somebody's mind? And second, if AI gets widely used, like which are the sectors do you see most at the risk?
See, this is something which is you should be an extremely high visionary for all this. Okay, I'm personally not. I like to take things as they evolve. Okay, but if you just think, if you just go back and see, just imagine when machines would have got invested, right? And as more and better machines came, everybody would have thought that now there should be no employment, because what a 20% job one machine is doing. But actually, if you think about it, the employment has grown, the world population has been growing, people are getting even more and more prosperous. So that is where I would say that it's all about who's adapting to it. People who did not adapt to machines, who did not get those skills for themselves, would have had serious challenges. And people, or even the generations after that, who would have adapted to it, would have actually
Benefited.
benefited big time. So I think it's all about not only accepting, but it's all about embracing, right? If you are not having an UPI today, you are missing out on many things. I mean, you're many things in terms of your ease of doing. You're missing out and the entire convenience that you have it at the tip of your fingers, right? So I think it's all about convenience. It's all about how you get making an application to it, like mobile phones. I mean, a lot of people can just play games, and a lot of people can do so much more productivity with it, right? So it's all about how you are going to use this new age technologies, whether it's AI, whether it's MLLs of the world, the large languages, all of that. So that is how I would like. So all the businesses which will make AI as a part of their DNA, they will prosper.
So will the existing or a traditional IT companies, it will become enabler, or it comes with certain sort of risk?
My sense is that they are going to be enablers. Okay, and I can tell you, at least for the next 5 to 7 years, I don't know beyond that, because say for example today, all the data migration to the cloud is a work in progress. A lot of that is still pending, and for this AI and data and all of data centers, this migration has to import, is very critical. That's so all this donkey work will have to be done by the IT companies. Second, all the mainframes also have to be AI enabled. For the AI enabled, you have to make them like this is like a Y2K. You know, when Y2K happened, we were all together. We know those mainframes had to be completely created where it doesn't go from, I mean, this, I don't know how many of you guys know, but this Y2K was a very big event. Y2K was year 2000. So from 90s, 1990 to 1999 was there in the computers, but they never had that 2000, 2001. So they had to change their mainframe so that the systems don't collapse on 1st January 2000. And there was a mad rush by all the corporates to Indian IT companies that please get this thing sorted before 1st January 2000. That was a Y2K event. And there was crazy order book and crazy mad rush with all companies, and they made money like crazy. It was literally raining money for all these IT companies. And then after that, everybody thought now this opportunity is gone. Now how will they make new money? But you see, in the year 2000, the IT industry was only 10 billion, or maybe less than 5-7 billion dollars. Today it's 250 billion dollars. There are at least 10 companies in this country which make profits of anywhere between 15,000 to 50,000 crores of profit each of these companies. TCS, Cognizant, Wipro, Infosys, HCL Tech, all these companies have capitalized on that opportunity over the last 2 decades. My sense is that it's going to be very similar as we move ahead, because whether it's the mainframe or whether it's the cloud migration, all this work, at least next 5-7 years, I personally feel that IT companies will actually do well.
Uh, what's your view on market? Where are the markets going on?
Like I was saying earlier, that for the first time we feel that the government is extremely cognizant of the fact that we have to seize this opportunity. We want India to grow. We want India to shine on the world map, right? Now they did everything for the manufacturing side. They did for this new age technologies. They are doing everything right. But for some reason, I mean, we know the reasons. But if you see, there was major slowdown in the consumption because of rural and also some bit on the urban side. You see, for the last 8 months now, since February till now, there are at least 6 or 7 things that the government has done which is going to revive consumption like nobody's business, right? It started in February
Tax
with the
cut.
tax rate cuts. Then there was ease of liquidity by RBI. Then there was interest rate cuts. In the middle, we had a great monsoon. Yet the government continues to give you GST cuts and real big GST cuts. So my sense is that this domestic consumption is going to go through the roof in the next 12 to 18 months. And because of that, we will get into a virtuous cycle. Because consumption will increase, the manufacturing will increase. Because manufacturing will increase, we will have higher capex happening. The engineering and the capex will happen. Because that will happen, again, higher infrastructure will happen. Because that will happen, again, your higher consumption. So we are actually getting into a beautiful virtuous cycle over the next 3 to 5 years. The only challenge that we are left right now is your tariffs, which is definitely having an impact. But as I said earlier, I am very hopeful that these tariffs will reverse sooner rather than later. And once those are out of our way, I think at least next 3 to 5 years, I am extremely optimistic as far as the growth is concerned in terms of the corporate profitability. In terms of the markets, I think I personally feel that today the large caps are better placed relatively in terms of the risk adjusted returns. Mid caps and small cap, one will have to be very selective. That mega wave which is lifting the entire boat up is probably going to take another 3 4 years before it comes. For the next 3 4 years, some mid cap and small caps will do well, some may not do well. So one will have to be very sure where the earnings growth is coming. Wherever earnings growth is coming, quality earnings, there you will see some good activity. So mid caps and small caps selective, large caps overall should do much better.
So you will see maybe stock picking remains a key, maybe in going forward.
Absolutely, yes.
So one thing you touched, maybe the tariff, maybe a short-term phenomena, but there is another thing happening in India is basically this. Whenever there is a state election happens, a lot of freebies are there, and governments have a very fiscal constraint. When they are fiscal prudent also, but they have a very limited room in terms of going out. How do you see that? Matlab, in last 3 4 years, government is uplifting everything else. Private have not joined yet. So can you throw your light in and around?
Yeah, that's a challenge. But again, as I said, that it is like see, our per capita incomes is still very low,
Yeah.
right? So from that perspective, they have to allow people to, or they have to enable people to stand on their own feet, right? And that is where we are very hopeful that once this we get into this virtuous cycle, all these things that they are, see, today government is giving all these freebies because it is mattering to those people. Why is it matter? Why can we say that it is mattering? Because you are giving freebies, people are voting for you, right? Which means that it is giving me these freebies matters to me. Like for example, tomorrow if I call you for some place and I tell you there is free dinner, will you come? I don't think it matters to you that free dinner. But if I tell you that we are going to meet some of these good guys where we will have some good interaction, you will be very happy to come because that is what matters to you, right? So once some of this 60, 70, 80 crore people who are getting all these freebies, they start being on their own feet, those freebies will also not matter to them. And once, because those freebies will not matter to them, even if you offer them freebies, they will not vote for you. They will vote for you for what matters to you. So once this we get into this virtuous cycle, and once people start standing on their own feet because of the overall growth in the economy, it is going to be a completely again paradigm shift. Then the relevant topics of elections will be very different than what we are seeing today. It will evolve in the next 10 years completely.
And it
Right?
has evolved from last 20 years.
Exactly, and it will evolve even more, right? Say today in a city like Mumbai, and I'm not talking about all the areas, but say if you take wherever you have large community livings, large big societies, whenever a corporator goes for a local election, those guys are never asking for any freebies. They are just saying about हमारे building के बाहर जो road है ना वो ठीक करके दे, right? That is what starts mattering to them. So what I'm trying to tell you is that it's just that people have to start getting in their own feet, and once we are into this virtuous cycle, these are things which are very slow movement. But if you see over 5 years, 7 year, 10 year, it's an amazing shift, positive shift to my mind.
There's also one trend. Matlab, India is filling the complete bull market, but outside India, if you go, there is a lot of chaos is there, a lot of geopolitical tensions and stuff like that. So, is there any reason why India still have that bullish? Though the last 15 months market haven't done well, but still relatively, I think India is still better doing in terms of on a capital market side.
So, say last 15 months, we have been more or less flat, that I understand, but the undertone is extremely buoyant, is what you're saying, and I completely resonate to that. Also, important thing is global markets are actually doing well, right? If you see the Germany markets, if you see UK
Japan.
market, Japan,
Japan.
all of them, US, all of them are actually doing well in spite of all the geopolitical challenges. There are two wars going on, so many people dying day in and day out. It's so sad, right? And yet the markets are doing very well. To my mind, again, this is a trade of de-dollarization, right? Because money is moving out of US Treasury. Now, when the money is moving out of US Treasury, it has to get parked or invested somewhere. It is getting invested in US equities. It is getting invested in other currency asset classes. So, for example, German equities, UK equities, Japan equities, gold, silver, because the mother of all accumulator of funds was the US Treasury, right? Now, even 10-20% moving out of that, it's like it's like a buffet dinner for the whole world, right? Everybody gets that trickle, and it is so large for me. So, to my mind, that is the mega trend that's happening at this point in time. Geopolitical challenges. In fact, I am a little surprised that in today's day and age, we are having this kind of physical wars where people are literally living there. I mean, they're actually dying. Which is actually, I thought that we have already evolved from that, but unfortunately, that has happened, and it's still continuing. But the good thing in a way in this entire bad thing is that it has remained localized, right? That is something what we realized when Russia Ukraine happened for the first time. And if you see now, this Israel and Hamas, everybody was worried that the lot of other Arab countries will join Hamas, and they will, it will get probably more
Widespread.
spread. It has not happened. It has remained very, very localized, which shows again the part of the maturity, the evolvement of the world, that everybody is trying to say was we have to avoid this at whatever it may be the reason, but we all have to avoid this. Whoever is doing it, we have to actually help them understand that let's stop this or pause this or whatever it is, right? So probably that's the reason why, although it's a very unfortunate thing in terms of these wars, people are still happy to invest money. Otherwise, in this kind of environments, there is a lot of flight to safety. But I'm not seeing that today. People are very happy investing because people are saying the other things are not going to get impacted. So let us focus on that. We'll keep this on the side, and we'll have to make sure that this doesn't get widespread. That's all.
Just wanted to connect on this FII, who is one of the large investor in our country. And if you look at last at least 2-3 years, they are every quarter, every year, they are like reducing their stakes, and that is almost like all-time low. So will you see and they are returning back? And why? Is there any reason? Is there because they are having any losses in any other market, or they see valuations are extremely high? What are the reason why they are leaving?
Like I was saying earlier, right, that I'm an 100% equity guy, so I don't look at any other asset class. But asset allocation is very important. Same way for global investors, India is only one of the markets. Even if for equities, India is only one of the markets. So they will look at the full board. Like when you're playing a chess, important thing is you should look at the full board, and wherever you see an opportunity, you go and attack there. So sometimes it's not your fault why you're not getting allocations. It is somebody else's stupidity which is taking money out from you. For example, because China as a government clamped down on all their industries, like Jack Ma getting vanished, right? Is a very serious issue. And because of that, their valuations went completely went. Then they had a real estate bubble. All the real estate has gone through the roof. So they had a serious crash over there. So China markets became extremely cheap. In fact, there's a Ruchir Sharma article about 6 months or 3 months back where he said that you are getting a 10% free cash flow yield. Now that's again beautiful, right, for as an investor. Now, why would I want to be where I'm going to make 3%, 4%, 10%, even 20%, but I'm getting a 10% free cash flow yield? Here today, the free cash flow yield in the country probably will be in the range of 3, 4, 5%, right? So for me, it's just about as a global investor, India is nothing wrong, but I'm getting a better deal somewhere else. So for me to move money, why should I hesitate? Like how I moved my money from equity to gold, just because I felt the risk adjusted return is better in gold probably at that point in time. Because if I just thought that if I'm getting tax free, even if I'm 12.5% less than equity, I'm better off because equity will have taxation. Here it's zero tax. Same way they are evaluating things, right? But the fact is that if we believe that India's growth will continue the way we are anticipating, how? See, because again, getting something cheap is a trade. It is not a long-term investing. Because cheap will become a little bit expensive. After that, if there is no growth, then what? Whereas India, if it is a 10, 15, 20-year growth story, it's a secular investing opportunity. Right? So, coming to your next question, I don't have a doubt at all that they will come back. The only condition is that we have to demonstrate quality growth. That's the only condition. The third part, I think, which is probably unfortunate for them and fortunate for us, they have been historically used to that whenever they sell, the market goes down and they get the opportunity to buy cheaper. But today, what has happened is that I told you that about 6-7 lakh crores of buying by DIIs is happening because DIIs is including mutual fund plus insurance, right? So, and if you just see calendar year 24 or I think the first 15, say from January 24 till March 2015 or June 2015, I remember, sorry, March 2024 till June 2025 or something like that, FIs were net sellers of as high as 4 lakh crores, which is good, maybe 50-60 billion dollars. That's a crazy number to my mind. But when you just put it in the same picture, DI is investing 7 lakh crores, that number is not any more meaningful. So it's all about the context. It's all about relative, right? So that's another challenge for them. That now that they have already sold, they want to buy, but it's not giving them any opportunity to come back easily. But the day we get into this virtuous cycle of having a high growth, they have no choice to my mind. They have absolutely no choice, right? The other very important aspect which actually I wanted to show here but I missed out, so was that, see, as a rupee depreciation has been a big challenge for last so many years. If you, I mean, last 2-3 months has been different because of this tariffs is a different story. But if you see from for the last 10-15 years, say before 2014, okay, before 2014, say from 2000 to 2014, those 14 years, Indian rupee used to always depreciate by at least 4 to 5% annually, right? And why this? Because the 10-year GSEC India and the 10-year US Treasury, the differential used to be 450 to 500 bips on a continuous basis. So this depreciation was happening. If you see from 2014 till now, and particularly the last 3-4 years, the 10-year GSEC and the 10-year US Treasury, it has gone to as low as 170, 180 bips. In fact, right now it's 240 bips. But still it is significantly below the 450 to 500 bips. Effectively, what I'm trying to tell you is the rupee depreciation expectation from here on should be just in the range of 2 to 3%. Because finally, at the end of the day, global investors look at the returns in dollar based. I'll tell you there's another data point. The last 10, 15, 20 years, okay, each period, 10 years, 15 or 20 years, US is the best performing market in dollar terms. But the next best and at a very, very close margin is India. All other markets are at significantly lower returns. So what I'm trying to tell you is that we are all, I mean, anybody who's investing knows this data. So we are on their radar. They are just waiting, and they're in the meantime they have also got better opportunity because of somebody's other stupidity. So they are right now allocating money there.
So another area, so this, as you said, everything is a cyclical, right? And so you as an investment professional, how do you ensure that in bear market you make money, and in bull market you should not lose money? So uh, how do you ensure that?
See, bull and bear is for a particular asset class. It is not for all asset classes most of the time. Sometimes it can happen that also. Like for example, COVID happened. So it's a one-off event, right? But otherwise, these are all cyclicality. So you will have to get your asset allocation right. This is what I was trying to tell you. You have to see for this particular asset class right now you are in which where are you in terms of the entire curve? Are you at the beginning? Are you in the middle? Are you at the fag end? Depending on that, you will have to do your allocations. So asset allocation is very, very critical to avoid this bull and bear returns in your portfolio. Point number one. I think the other very important aspect is when you are doing long-term investing, right? There is no bull or bear. Okay, because then you are not talking about markets. You are talking about investing in a business. Every business will go through a good and a bad cycle. The question you ask yourself is, does this business have it in them to survive in the bad times? And when these bad times become good times, will they emerge even stronger? If you believe in that, just be with that business, right? So there will be periods because see, equity as an asset class will never give you returns every year, and it will never give you returns equally. It's not like a bank FD every year 7, 7, 7, 7. It will be -7 plus 25 -7 -35 over a period of time. It will be 12, 13, 14, 15, 17 because there will be 1 or 2 years which will give you 50% return. Now, which year nobody knows, right?
That space we have seen last 26 years. We are there.
We were also there. Yeah, I forgot that.
whole time there
So we
with
know
it.
that. Yeah. So, anyways, my point. We were in Nirlon.
We are in Nirlon, this is correct.
So, anyways, my point is that when you are investing in a business, there is no bull market or bear market. Is the business doing the right thing? Because circumstances, and I can give you because see, we own businesses for 7 to 10 years. Every business has gone through a bad time. There is no escape from it. Absolutely no escape. But when the business is going through the bad time, the best decisions are taken by those promoters because you are forced to do. Like for example, GST probably is one of the best decisions. Why? We are forced to do because of the tariffs. We have to revive the economy, domestic consumption. Think about it this way, right? So if we are doing all the right things, we will emerge even stronger. That is what I'm trying to tell you. And asset allocation, obviously.
So is that the holding the winners is really hard when it comes to a person like you?
Holding the winners
Because
is,
you don't know, like
it's all about temperament. It's about, there are about 2 or 3 things, right? It's first about temperament. You should have the temperament that I'm ready to see a drawdown. Like I said, that when Nesco was touching all-time high and COVID happened, we saw the stock price down by 30-40%. And it remained like that for next 2 years, 3 years, 4 years, I don't know how many years. In 2020s and 2024, 4 saal tak no return. After down by 40%, imagine. Right? So, but you have to ask yourself, are they doing right? What are they doing? You know what business you are earning. It is your research which allows you to ride all this. It is your understanding, it is your conviction. Research in bull market has no value. My son is making more money in Bitcoin today, right? So it has no, I am completely useless. Let's be very honest. But when the bear market comes, we will see how many boats are above the water, how many have sank. That is where the research actually comes into play. That is the real thing.
Just keep this conversation will help you because there are a lot of clients are there who do investment in stocks and they don't know just anything else. They just maybe on a trendy fashions, किसी ने बोल दिया, trend में बोल दिया, and they just bought it those sites. this conversation will help you how the investment professionals thinks about the investments, and when they, these are live examples, he's candid enough to share his live examples to at least to connect the dots basically. Another one trend, or I can see that many investors they follow they start cloning their portfolio to the famous investors. Is the fallacy, like is the something?
See, I think there is nothing wrong in that, okay? Because these are all in data in public domain. So there are two parts to the story. There are two sides of the coin rather, right? And first is, one is you should be smart. If you are not smart, follow the smart. What is wrong in that? But remember one very important thing, which is what I learned from Ramdev ji, Ramdev Garba. I worked with Mutral, so you know that. So what he said is very interesting. He said, you can borrow my investment ideas, but you can't borrow my conviction. So when Nesco went down by 30%, on that day guy who was following me, I don't know what he will do. Maybe he would have sold out. But I carried on. Today I am able to reap those benefits. Right? So if you borrow the idea, you will be able to my personal experience is, whoever is borrowing an idea, they may be successful, but partly, only up to a point.
Conviction don't come from
Market will test your conviction, whether you like it or not. This is the reality of life. Tomorrow gold, because I today gave so much gyan on gold, no, and I am so much invested. Tomorrow gold will go down by 30%. I can bet. Tomorrow means in the next few months. That time my conviction, I don't know whether I'll be able to speak also or not. Who knows, right? But market is going to test my conviction. That is my basic point, right? So, but see, if you can't even at least be partly right by following, why not? And try to think that whether this guy is doing right, wrong, but follow the right people. Most important. Whom are you following is also very important, right? And see, again, other very important I have seen, if you follow somebody partly is a problem. Like for example, say Rakesh Jhunjhunwala. To my mind, he's one of the best investors in this country. And I have personally met him multiple times, and I know he's one of the most generous guys. So whenever he has shared his how he used to invest, how he used to think, and everything is so fantastic, right? And whether I say it or not, he's the most successful person as far as the investing in India is concerned. But I'll tell you, if you see how many stocks he has invested in, only maybe 10, 15, 20%. Suppose if he has invested in 100 stocks, only 10, 15 or 20 have actually created this kind of wealth for him.
Yes.
Right? Now, if I am following him, and if I have followed only 30, 40 of his ideas, and if I have not followed those 10, 15, what's the point? What I'm trying to tell you is, in this following, these are all challenges. That one is, you can't borrow the conviction. Second, how do you follow fully? Because you don't get information every time, right? Then sometimes when you, like for example, say Warren Buffett, right? Warren Buffett, you can follow him because he also keeps on public disclosures. And people who have followed him to the T, that whenever the public disclosure comes, buy and sell, irrespective of price has gone up or down after his buying or whatever. But on the day the disclosure comes, it has worked. But people who start using application extra mind, okay, he bought for 100, disclosure has come at 120, I will try to buy this at 100, that stock will go to 200, and whichever stock comes back to 100 will go down to 60. So it doesn't work. Like for example, he just sold BYD. Now nobody knows what's happening in BYD, right? So I'm saying, if you're following somebody, ensure that you get 100% information. Otherwise, it will not work. That's my limited point there.
What are the unloved areas are there which you think one should look at? Incremental allocations of our client, sectors, anything?
If you ask me, equity as an asset class.
Equity as an asset.
So within equity, clearly IT is the most contra bet today, right? Within IT, I would say clearly the valuations are too much in your favor today. Even if you get 2-3 years right, you will make very decent returns. I'm not talking about 10, 15, 20 years over there. But IT, I think, is clearly a contra bet there. So if there are some IT funds and all of that, maybe you can look at that. You know it better than me. Second to my mind is banking and financial services. Okay, today their valuations are extremely reasonable in this market. If you see what used to be 40% as a weight of the IT companies, BFSI, what used to be 40% in the Nifty has come down to less than 30%. Effectively, that is telling you that it is no more as favorite as it used to be 10 years back or 5 years back, right? So I think that's another sector where I feel that this financialization theme, this private sector banking, some of the large NBFCs like Bajaj Finance, all of them will do exceedingly well in the next 3 to 5 years because we are in the down interest rate cycle, not being so very strong. I mean, it's in the downward spiral, and all of that should help just grow the credit. And asset quality will also remain very good. So once you have growth on the business side and your asset quality is decent enough, these companies make a lot of money. So my sense is these are two big sectors where I think today the allocations have actually come down, and which is where I see the risk adjusted return today to be more favorable. The risk reward ratios are far better today in these two sectors. Auto, I would have said, but I think post GST they've already run up. So that I would rather wait for a better opportunity in terms of as a contra or a unloved sector. Pharma, I think, is also good, but it's not so much unloved right now. Maybe selectively you'll have to do. But if you from a sector perspective, these are two ones I would say.
Any thought on the geography point of view? Apart from India, is there any other, if you track?
Anup, so honestly, I'm not the right person. We have been just equity guys. Within equity, we do only one thing, that is listed Indian equities. That's all what we do. So honestly, I'm not the right person.
So one question, let's say suppose if someone in 30s, and in
Sorry?
if someone is 30s
Yeah.
and someone is 50s, do you think the SIP strategy has to be different considering where they are in their life cycle? If yes, then is there any thought on that?
See, for somebody who is in 30s, depends, but probability is that they can only do SIP because they have so much, their incomes are limited, or rather their wealth pool is limited. They have expenses to take care of. As you are in 30s, you start growing your family and all of that. So you can only do SIPs. When you are in your 50s, you should have created some bit of pool of wealth. So then SIP is actually irrelevant to my mind when you are in your 50s. It's that time it's more important is to actually have the right allocation of whatever you have accumulated. Right? So like for example, if I am in 50s today, so for me SIP is, अभी SIP करके क्या अभी होगा, right? पर जो है उसको अगर right allocation कर दिया, that is where we will create our alphas. But for 30s, first to create that pool, they will have to do SIPs to my mind.
When we look at as a portfolio review strategy, when do you think one should go back and check at what drawdown percentage one should have a serious relook at in terms of whether that strategy working or not working? Is that 15-20% drawdown in the portfolio?
So
is that
asset allocation, right? You're saying? See, you'll have to benchmark it to something, right? So for example, during COVID, March 2020, everything was down 30%. Equity as an asset class. If you were down also 30, 35, did it matter? No. So you should benchmark to somebody. How much you are underperforming to benchmark is critical.
okay?
Right? So if suppose your overall, suppose you have 50% in equity, if you have 20% in fixed income, you have 30% in say precious metals, if this is your allocation, you put the benchmarks for all these three, that how has the equities in that period done. Suppose we have done 10%, so you have 5% coming from there. The balance, another 20 and 30 has suppose done another 6 to 7%, so you have another 3%. So your benchmark is done about 8%. If your portfolio is doing significantly below 8%, so if it's doing only 2-3%, then you should ask yourself that what is wrong. If your portfolio is doing 9%, it may look low, but the environment is only giving you 8%, then you are on the right track. You shouldn't worry too much, and you just have to say these are bad times, times will change and it will get better. So I think you will have to benchmark and say, are you underperforming to the benchmark or you are doing in line or better than the benchmark? If you are significantly underperforming the benchmark, maybe you should ask yourself, revisit, are we doing something wrong? And if you still believe no, that it's just a timing issue, then stay with that allocation. But yes, as a review, you are just asking me as a review, not necessarily as an action, but as a review, whatever allocation is there, and with that allocation, the benchmark return, weighted average benchmark return of all those asset classes, and what is your portfolio return, you should just think about it that way.
Is there any personal finance habit you are still struggling with yourself?
Oh, with me.
Yeah,
Ha. So,
it's more of a personal
no, that's
question on the
fine.
personal
But no,
finance.
it's a fair question. What am I struggling with? I think so. As I said, see, the one big struggle has been that we were not thinking about anything other than
Equity.
equity, right? Which I kind of changed in 2022. Okay, and I'll tell you what. And this is in spite of it being in front of me, literally in front of me. So I'll tell you. In 2009 precisely, or maybe 2008 or 9, one of the two. It's a short story. uh, I met Nirmal and I told him that I want to meet Karan because I want him to sell my PMS.
Hmm.
So he said, okay, you go and meet him, I'll set up an appointment.
Hmm.
So Karan met me, Karan and along with Yatin. So both of them met me, and Karan was not interested in talking to me,
Hmm.
and Yatin was just listening, and I kept on telling him something or the other. And Karan, ये वो ऐसा देख रहा है इधर उधर, and I'm wondering ये क्या, what, I mean, come on, at least listen to me nicely. And then he was so when he actually he was, I felt that he's not listening to me, but he listened to me everything, which I realized little later. But basically he was telling me couple of things which I did not grasp. He said that fixed income में ये वो हो गया. So from, if you see, from 2008-9 till 2013, equities did the most pathetic.
Yeah,
Liquid
zero.
funds gave better
Better
returns
returns, yeah.
than equity,
Yes,
right?
yes.
Which I never realized what Karan was trying to say. And in that period, Karan's first product was real estate lending, where he gave fixed
Return.
kind of return, and it was the most successful product,
15,
15,
16,
17% returns, right? Now I'm thinking that he was telling me that boss, equity as an asset class में नहीं है अभी दम, अभी तुम्हारा दम दूसरे asset class में है. 2013 came, Umang Papneja, who was with him.
Product hai.
He called each and every fund manager. He called Ramdev ji, he called Sunil Singhania, he called Prashant Jay, and said launch special products only for our clients in equity, just at the cusp of equity taking off. Again in front of me, I didn't realize, and they actually put in money from, and that was the time when their actually real estate money got matured, and they actually put all the money in equity, right? And they started doing well. Again, you see in 2017-18, when markets did well for some time.
During that, in the same time, I think they came out from that NSCL का जो fix वाला था ना, they were
Exactly.
just ahead of that basically.
Exactly, right? Then 2016-17, when everybody started doing well in the markets, and then lot of HNI families, when I used to go and meet them, na, they used to take money from out of my portfolio, and I used to tell them, sir, our portfolio is doing well. नहीं, अभी थोड़ा वो unlisted में करते हैं. HDFC के जो employees का मैं ESOPs buy कर रहा हूँ. So I used to wonder ये क्या हो रहा है, अभी अपने पास तो product नहीं है. And Karan launched that product, Pipe, right? Where he said unlisted, and everybody, and he launched some 7 series, 7,000, 8,000 crores. What I'm trying to say, see the way he moved from one asset class to another asset class. It was all in front of me, still I couldn't do it. So I was struggling with all of this. So this time, when I got some decent returns in stock markets from my mid cap, small cap allocations because of our AIF funds that you said, 800 crores that we returned. So we had some carry, and I got some money over there. It was a leverage play for me personally. So in that sense, I forced that now what do I think about market? And I said, risk adjusted return in mid cap, small cap में तो अभी नहीं लगता. And this was December 22. That time it was, in fact 23 also markets did well.
Half of market.
But over a period of time, now it's not done as well. And I forced myself that दूसरा asset class में अभी allocate करना ही है, because that's when I started looking at it. That's when I came across sovereign gold bonds. Sovereign gold bond तो कितने साल से चल रहा है, मैं देख ही नहीं रहा था. So this is a struggle. So like another question you asked me, have you looked outside India? I am not. I'm forcing myself now. That was, I need to look at it. So these are some of the things I would say.
I think what I learned from, he also called some 15-20 people, Karan and Yatin. In that discussion, one thing he kept multiple times, basically optimizing the portfolio.
Absolutely.
ठीक है.
He
And
never said I
then
want best returns. I want
he's
optimal
optimizing
returns.
optimal returns.
Absolutely.
And then when I came back, why he is using that optimal word all the time, all the time, all the time? Then I realized it's not anything else, but to just make sure that optimizing is what you are doing. You are just reducing the risk.
Absolutely right.
ठीक है, that's it what you are doing, and then
Absolutely
you
right.
make money.
Absolutely right. But he was also cognizant of the fact where is the asset class moving.
Yeah.
And he kept on giving to the investor what they are looking for. Now that is something what I have to learn better. Let's put it that way.
So with that, I think there is a success. When the people get a success, is that success is combination of skill and luck? Or, matlab, what is your thought on this?
I strongly believe that it is skill and luck both. I wouldn't say skill. I would say it is hard work and luck. Skill kuch nahi hai. You have to get the skill by working hard. I mean, you are the best example, the most unassuming guy I can think of creating money honey, and you've done it brilliantly. I'm telling you this very candidly. So I don't think you were born with this skill. You have worked hard. You have worked hard when we were there at India Infline for the last, I don't know how many years Money Honey now.
17 years.
17 years Money Honey is not a joke, boss. It's a big deal. It's a big deal to my mind, right?
I mean,
So
credit goes to here.
of course, 100%, 100%, all of it, of course.
Anything I missed out, you think, as a advisor, or things I should have asked you, and maybe.
So I would just say that see, most important thing is now you are 17 years. You already have some credibility. All that you have to ensure is avoid mistakes, which is, to my mind, in your business is only one big. Because see, 17 years is a lot of time to recreate, and it can go away like this. What is that one mistake you think it will happen? I personally think you have to just make sure, and that is your responsibility because it's all about the culture in the organization. Avoid mis-selling. To my mind, mis-selling is the biggest challenge in our industry today. It has been there for all this while, and it's a function of greed. It's all greed, whether it is global financial crisis, and it's not India specific. It is globally, and it has nothing to do with India or US or anything. It's to do with humans.
Yeah,
it's our
it's a
greed
human.
that overrides everything else. So how you set the culture in the organization that we have to do the right thing, and right thing. I think that's the only thing that I can say.
Okay, thank you. I think I touched upon that in the morning. I think it's there. Maybe one last, maybe your advice to people who are Gen Z or Gen Z, like anything, what you learned maybe in last 25, 30 years, which had helped you, some of the habits, some of the things which you think are important, it will not go away.
Yeah, I think
Time
most
tested.
important thing, and which is, I would say again, where I have struggled, is that don't have a closed mind to anything. Have an open mind to anything and everything. Be extremely curious. I have missed out opportunities left, right, and center because of my biasness, because I had a pre-notion, because I've been close-minded. मतलब अगर बोलेगा कि अनूप मनी हनी करेगा तो मैं बोलेगा अरे छोड़ ना उससे कुछ होगा नहीं. That's stupid of me, right? I should have an open mind. If he's doing something, watch him, observe him, understand him. What is he saying? So actually, the point here is don't discount because who is saying. You should say it's not about who is saying. It's about what they are saying. Apply your mind what they are saying. The most intelligent person will also say something stupid. So then say ये नहीं मतलब है. And the most dumbest person that you think is dumbest, but actually that person is not dumb, will actually say something very important. So what people are saying is very important to focus on rather than saying कि ये कौन बोल रहा है. Keep hide that name, hide that face, and focus on what they are saying. See what the opportunity is, and that is something what will actually make you evolve. To my mind, that is the biggest learning for myself, and that's an advice and that is something what I tell my son. I don't tell him this, but at least I try to inculcate that whatever we are discussing now, we have to discuss with an open mind.
Please give disclaimer, last 2 points, that this is what we have not pre-discussed, is not very doctorate.
We, I have, yeah, of course, of course.
These are all 2 points what we discussed. Thank you, Sachin. Big thank you for being with us, and wish you all
Pleasure,
the best.
pleasure.
For
Thank you guys. Best wishes
you.
to all of you. Thank you.